This past week's big consolidation news, PTDA's tips for recruiting and training millennials, and the latest figures for United Stationers, Grainger, and others. All this and more in today's installment of the Industrial Distribution Video Market Report, brought to you by IDTV. The end of the year financial results just keep rolling in, and with them, some surprising news of possible divestitures. Illinois Tool Works, or ITW, announced that it is initiating a review process to explore strategic alternatives for its industrial packaging segment, including a possible sale. The segment includes such well-known brands as Signode and StrapX, and had 2012 revenues of approximately $2.4 billion. E. Scott Santee, president and CEO of ITW, said that while they are exploring their options, quote, expect the review process will last through the remainder of 2013. Rexnord, the Milwaukee, Wisconsin-based manufacturer of ball bearings, owned by Apollo Global Management, said it has hired Goldman Sachs Group to review its options, including a possible sale. The alternatives considered could include the sale of the company, the possible sale of one or both of its business platforms, or the maintenance of the current structure and execution of the existing business strategy. Rexnord also reported that its net sales for the third quarter of fiscal 2013 were $472 million, a decline of 3% from the prior year.
There doesn't seem to be any slowdown on the acquisition front either. This last week has included some major announcements from some key players in the industrial market. MSC Industrial Direct announced that it has signed a definitive agreement to acquire substantially all of the assets of the North American distribution business of the Barnes Group for $550 million. With this acquisition, MSC adds a highly complementary provider of fasteners and other high-margin consumable products and services with an industry-leading field sales force and vendor-managed inventory solutions. The acquisition is expected to close during the company's fiscal third quarter. Another big announcement was made jointly by Kaman Corp and Wajax Industrial Components, or WIC. The two companies announced that they have formed a strategic alliance. While Kaman and WIC will each remain as separate and independent entities, they will join forces to compete for business-to-business and supply agreements with customers in multiple jurisdictions, providing an alternative to country-based supply agreements. The alliance will operate under the name SourcePoint Industrial. DGI Supply, a Dual company, announced that it has agreed to purchase Merwin Stoltz, a Wisconsin-based distributor. The transaction is expected to close on March 31st, and DGI plans to move Merwin's local customer service team and inventory from West Allis to Menomonee Falls shortly after the closing.
Several other companies reported year-end numbers as well. Lincoln Electric reported record sales and earnings per share for 2012, the highest in the company's 118-year history. Sales for 2012 were $2.9 billion versus $2.7 billion in 2011, an increase of 5.9% for the company. According to John Stropke, chairman of the board, the company expects to see lower year-over-year overall growth in at least the first half of 2013, but remains very confident in their ability to execute long-term strategic initiatives even in these challenging times. United Stationers also reported record revenue and earnings per share for both the fourth quarter and year-end December 31st, 2012. It also announced a workforce reduction and facility closure program to reduce costs while allowing continued investment in growth initiatives. For the fourth quarter, United Stationers' net sales increased 3.6% from the prior year, and net income rose 18% to $32.9 million. Grainger reported that sales for the month of January increased 8% versus January 2012 and included 3 percentage points from volume, 3 percentage points from price, 1 point from sales of seasonal products, and 1 point from acquisitions.
The numbers are looking up for the power transmission and motion control sectors. The PTDA recently released the latest PTDA Business Index, in which the fourth quarter of 2012 recorded a reading of 50.7, which represents a very slight increase over the previous quarter's reading of 50.3. This indicates that the power transmission motion control industry expanded for the 11th consecutive quarter at a slightly faster pace compared with the third quarter of 2012. PTDA members expect 2013 to be another year of growth, with an average projection of 7%, up from the 6% outlook last quarter. Meanwhile, Industrial Careers Pathway, or ICP, a joint venture of the PTDA Foundation, Industrial Supply Association Foundation, and NAHAD, keeps rolling out initiatives to attract young job seekers to the industrial sector. While attracting new blood is great, it is not always easy to incorporate a new generation into a long-standing workforce and industry. One of ICP's initiatives to help manage the new Gen Y employees includes a talent tip sheet, a quick read e-blast which delivers the best ideas from noted experts for attracting, hiring, and managing millennial employees. You can subscribe and receive a new tip every other Wednesday at industrialcareerspathway.org.
And that's all for today. For more latent breaking distributor-focused information, visit us on the web at www.inddist.com. Stay informed, stay classy, stay with IDTV. From all of us here at Industrial Distribution, thanks for watching.